Good evening. Welcome to the Eye of the Storm podcast for the NASDAQ 100 for Tuesday, May 17th, 2022. I ended up spending a little bit of time reviewing my longer term charts, which I've also labeled and I know I've shown in other podcasts. So here we are on the NASDAQ on the weekly chart. And I thought I'd start here because what I keep attempting to point out or just show via the count on a daily chart is the potential and probability of a drop down to the pandemic or post when we first heard about COVID, the March 2020 lows. Because from there, where we zipped up to the all-time highs as they stand right now. So again, I've now run some Fibonacci retracements, low to high, to cover cycle 5 and also the basically cycle 5. Intermediate 5 sits within it and cycle 5 is above it. So for this last move up, which was a primary degree fifth wave. And from that level, I am now counting the first leg down for at least a primary degree decline, corrective decline. And so the A wave is what I'm looking at right now. And the way I'm counting the A wave is again coming down to an intermediate degree level, which I put there. That's where that all kicked in. Now, yes, there remains the potential that this could be intermediate wave A, this could be intermediate wave B, we do an intermediate wave C wave and produce then a much stronger rally with the high potential then to possibly go to new all-time highs, either as a B wave or just as a continuation of this longer rally with an extension occurring within this primary fifth wave. Now, is that possible? Yes. I've held this count for quite some time, and I believe I may have made one or two small adjustments in that did not affect the high. It affected what the balance did, but the highs remained the same, obviously. And so what I continue to look at is on the weekly using my same tool. So here are my moving averages, which, by the way, are still just now turning here. They've turned nicely lower on the weekly chart, but the 20 just broke below the 50 and now lining back up. So it was the 200 and then the 50, and these were all above. Now the 20s finally crossed the 50, and that happened last week. Now, then last Thursday's lows, no, the 9th, on May the 9th, the market came down, and that's where it actually put its low in for this minute first wave down, and that's 11,689. But now let's just take a look at that level. It is actually where the weekly 200 moving average is sitting at the moment, right there. In fact, they're sitting together having a conversation. Added to that, we ran Fibonacci retracements, high to low or low to high, and the 50% level between the two is right there at 11,689. So now we've got a confluence coming in here. We have a Fibonacci retracement that lands right there. We have a low thus far in a sequence, a down sequence that ended right there. And we can fill in the blanks about the Elliott count. So if my feeling is that this has finished a minute first wave and we're in a minute second wave, then where can I think the minor third wave and then the larger intermediate third wave can come in? And I've been expecting this intermediate third wave to basically come in just below 96,113. I have support for it at 9,070 right there. So that is where I'm looking for the intermediate third wave. Now, again, when we're using Elliott, the fourth wave of one lesser degree is often the place where we'll find our support for different levels of varying degrees in a correction phase. So we're correcting from a supercycle degree level, a cycle degree level, a primary degree level, and an intermediate degree level. That's all that is being corrected. So right now, the intermediate degree level only really goes back to here. The primary degree level goes back to here. So we're putting in the correction for two, because it is a primary fifth wave comprised of 5 waves of intermediate degree. So we are correcting from that level to this level. That's as far as I'm getting within this larger correction. And so from there, I start to look for relationships. I start to look for what could bring us down. I start to look for different areas that the market can come to and how. So I got the first and the second, then we get a third that I would like to see come in about 9,070. Then we do an intermediate fourth wave, which should be still a nice one, and possibly get us back up to 10,400, 500, and a fourth wave, and then drop again in a fifth wave and end up somewhere close to 66.29. And again, I need to move this up slightly. It'll change a little bit here and there. But then that is going to be primary wave A. The alternate is different. The alternate view, again, this would have to be intermediate wave A, intermediate wave B, and now we're in intermediate C wave, carries the same downside target of 9,070. But what then would happen if that's the C wave and then a primary A goes underneath that level, you're looking at a B wave that could be very dynamic, has the potential that it could, again, depending on how it developed, but it always you begin that it has the potential to go to all-time new highs and still be corrective and still produce a devastating C wave that would just drive the market. For example, a devastating C wave in the Dow took place going into the 2009 low. That financial collapse, that whole upturn of the market, of bonds, of the dollar, of equity, of bank firms, of large banks that got crippled and crumpled right out of existence overnight. That one, that's the 2009 low that I just think the second part of this correction goes to, and it's from that level that the market then turns again and heads higher in a super cycle, wave 5 advance to new all-time highs. So in my book, they're still out there to happen. Others believe that we should be in that now. And it's like, well, I believe we need to finish the fourth wave and then we'll go much, much, much higher, much faster. Now, also, I just want to emphasize here, folks, it's not an insane look at the market, whether we want to consider it technical or just that we're using a principle and we're using how these things all relate, these moves on a chart relate to one another and produce support and resistance levels and are building blocks and how they can unwind as they get wound up. So markets are the pure nature of them are supply and demand, number one, and just what people's emotional feelings are at the time about many, many things. So there are enough factors to continue to cause the repricing of many of what we live with and what we live within. Many, many things need to get repriced because The availability, the supply, the demand is all switching around because of interest rates. So a lot going on now, but that doesn't mean you stop and you shouldn't make money. It is equally opportunistic. In other words, the opportunities come left and right to trade and make money when the market is going down or up. It's a matter of following price action. Instead of being bullish or bearish, you're a trader. You're following price action. Your job is to know the patterns. You don't have to understand or even think for a moment, well, I got to be bullish because of this, this, and that, because the technicalities of the market don't really pay attention to fundamentals. That's why it does a lot of the things it does. And we go, whoa, what did it just do? Okay. So within this conversation, it's not unrealistic for the market to drop from 16,768 to 6,800 or 6,700. Not unreasonable. And then for the market to turn and put in a magnificent rally. Now, if it does it in 5 waves down, then no, I would not be looking for new highs out of the bounce. But it could come all the way back up and retest all these levels up here. From a low of there, still can come up at least 50 to 62% of what we just did. They come back and they want it back. There will be so much play, ladies and gentlemen. There's so much play. There's no need to worry. We just need to follow price action. We just need to, set your rules for your trades and get it down. And then follow your rules. Don't break your rules. It's like Elliott said, learn Elliott. Follow the rules as I put out, because when you break them, he's telling you from firsthand experience, it's not going to be a pleasant ending. You won't be correct in what your thoughts are. So one way or the other, when that happens, you got it. You stop, you cut, you roll. So markets move in both directions and they can do it quickly. So I think it is not unconceivable right now that we continue to move lower. Now that I've taken a look at that weekly chart, the confluence of where we are sitting to what's available and coming in, this is doing this. It's arcing. Now, if it continues to arc via a break below it, then it'll move quicker and it'll drop in line. And as it does, again, I'm on a weekly chart, as it does, and these catch up and they break the 200, you get the same process. The additional push, the additional support, we're going down, the additional whatever it takes, but it happens. And that continues until the 200 is at the top, and then the 50, and then the 20, and then the 8, and then the 4, and it's all in this direction. It's going to be pointing down, and that is going to take some time, but we've come down. The market has come down and touched pretty much on the nose the weekly 200 moving average. A break there, I think, quickly drops the market down to 10,500. And then it continues to fall from there. And then we get into that area where we'll finish that intermediate third, do a fourth and a fifth, end up here, and then put in a primary A, and we'll be looking for an ABC to the upside to form primary wave B. Now, let me go down, fill in some of the blanks of what we've been doing. Here we are on the, I want the daily chart, please. Thank you. On the daily chart. And no, again, no real changes. So the highs are the high, and we're working our way down. I do like the steepness that we're falling. It does continue to adhere to kind of more wave 2 in nature, wave 3 in nature. And we're in a small, minute wave 2. So again, intermediate 1, intermediate 2, we're working on intermediate 3. Intermediate 3 breaks into 5 waves of minor degree, minor 1, minor 2. Now we're rolling into, we have started the minor third wave down, but it also subdivides. It breaks down into 5 waves of minute degree. Now we have minute wave 1, minute wave 2, taking it down to the hourly so we can take a look at that minute second wave. And that's right here. And it did kick in today. So we had left off yesterday, moving it into the Globex session, and it did, and it kind of waffled, and I'm looking for a B wave, and you got to get it going, yada, yada, yada. And it did. It just took its time, and this got real slow. So what we have is a up again. So minute wave 1 finishes at that low, which is right there, 11,689. Comes up in A, puts in a B wave down to here, and then there's a 1, 2, 3, 4, big 4. It's sloppy. It's corrective, so it's going to live, and then just takes off again with a sloppy like slam lower. This is the hourly, and then up, up, up. I believe we are headed for 12,622, but again, excuse me, there are many points within it that you just stop. You think everybody must just be looking at each other like, well, why are you buying? I don't know. Why are you buying? Well, I don't know. I'm looking for somebody to come up behind me to buy. Are they there? No, I don't really see anybody. Boom. Oh, here they come. Boom. So it's kind of almost like that. But it's reaching towards its resistance. But I believe it starts to fall into place that what happens now, right? Tomorrow's Wednesday, then we're heading towards the end of the week, and we have that monthly expiration on Friday. The closer we get to the monthly expiration with the prices up here, the stronger the probability they're going to hang out up there, try to even push even higher, just because they're here. And then they're going to be forcing the squeeze. Short squeezes are never going to be very pleasant. You can get a lot out of an end of a short squeeze. But in any case, I'm looking for the completion point to be coming up here pretty soon. If they do it tomorrow, that'd be great. And it would fit, because here's what we're looking for. This is the C wave. That was the A, that was the B. Now we got the C. C does appear to be nearly complete. First place I'm going to look, 12,622. We have above that, 12,842. Is it possible? Yes. Am I looking for it? Not necessarily, but it's there, and you have to include it. So if the market continues to break down, it's the same. From here on out, the breakdowns will basically remain the same. With speaking to the moving averages on the hourly chart, there's the 200. It still is flat. If it starts to turn up, yes, the market will gain some power. But right now, just flat. And you can tell it doesn't get very far. But the 4, the 8, and the 20, 20 is getting ready to cross the 200. If it does, it could push it right above there. Give it a little boost. And the 50 should be coming up. Once and if, that's a big if, the 50 crosses above the 200, then you can get that push up to 12,842. I would say you could probably even count in 13,000. Not my favorite area. I really don't. Again, algorithms, they can find the power. They just do it. And they aren't really looking at price as much as they're looking at whatever else their algorithm goes and checks out, premium. If the market turns, and from whatever level it turns, I believe that it would be dropping in a minute third wave of a minor third wave of an intermediate third wave. So again, we continue to deal with the 3 of the 3 and the 3 until we can get this whole larger one done. And it's coming slowly, but it is maintaining structure. So everything is still falling in place that we should end up closer to the March 2020 lows before we put in what I might call a midterm, near to midterm bottom that would produce a very tradable B wave, doing a lot of crazy things, but ending up higher. It would be a counter trend advance, 3 waves up. And that's once we get all the way down there. So lots to look forward to. For tomorrow, I believe we look to see what happens up at 12,622. Potential and probability have to remain at 50% again to reach 12,840 to 45. And we have top side at 13,000-ish. Downside, it'll be sweet, it'll be quick, it'll be just drop. And first target is going to be that 200. If the 20 is above it, then it's going to be the 20. But I'm going to imagine that if it gets through that 20 with any speed, it's aiming for the 200 just to build the momentum. And that momentum will build because what it really does measure is exactly that. And what's going to cause it? Everybody who really wanted to get out and take profit didn't, so you get all that flurry. Then you get the longs that kind of come in because they're going to be dropping down and they see the technicals change. So a lot can happen. But that is what I would look for, that the market does not have a problem slipping and breaking below moving averages, at least the hourly ones. When they start doing that, when the market's doing that, it's like, we're getting out. These levels, we're done. And they're moving. And they will be looking for value. And where value comes in, they will sell. Okay, I am going to leave it there. Tomorrow, let's see if we can finish up this minute wave 2 correction and get on our way to the downside. Next update would be Wednesday, May the 18th.